Hello everyone. My greetings to one and all. This is the 12th session on national income estimation. Prior to this, you have understood various basic concepts which are required to actually estimate national income or domestic income. I am Poonam Vohra from Macroeconomics Learning Center. In this session, you will understand the related aggregates of national income. So let us begin. Before we understand the relationship between various related aggregates of national income, let's recall what we have understood so far and take note of it. One can find relationship between gross and net concept, between national and domestic concept, between factor cost and market price concept. For gross and net concept, one needs to either deduct or add depreciation. For national and domestic concept, it is net factor income earned from abroad. And for factor cost and market price, it is net indirect taxes. Suppose gross concept is known to you and depreciation is given. You need to deduct depreciation from gross concept to get net concept. And if net concept is known to you and depreciation is given, then you need to add depreciation to net in order to get gross concept. Further, if domestic concept is known to you and net factor income earned from abroad is given, you need to add net factor income earned from abroad to domestic in order to find national concept. Accordingly, to find domestic concept, you need to deduct net factor income earned from abroad from national concept. And further, if market price is known to you and net indirect taxes are given, you need to deduct net indirect taxes from market price in order to get factor cost. Accordingly, net indirect taxes need to be added to factor cost in order to find market price. There are 8 related aggregates of national income and each of them can be linked to each other on the basis of these equations that we have just learned. These aggregates are GDP at market price, GDP at factor cost, NDP at market price and NDP at factor cost. That is domestic products in gross terms and in net terms as well as at market price and at factor cost. Similarly, national product in gross terms and in net terms at market price as well as at factor cost. GNP at market price, GNP at factor cost, NNP at market price, NNP at factor cost. Now let's pick up any two to understand how they can be linked. So let's pick up GDP at market price and say NNP at factor cost. How will the link be created here? Look at step by step. First is gross. In this case, and here it is net. So you need to reach at net, and by deducting depreciation from gross, one gets net concept. Next is domestic product, and here it is national product. So the difference between domestic and national product is net factor income earned from abroad. So domestic is given. You need to find national, so add net factor income earned from abroad. Further, GDP is at market price, whereas NNP is at factor cost. The relation between market price and factor cost is net indirect taxes. Market price is given. To get factor cost, you need to deduct net indirect taxes minus net indirect taxes. So the relationship between GDP at market price and NNP at factor cost is when depreciation is deducted, net factor income earned from abroad is added, and net indirect tax is deducted from gross domestic product at market price to get net national product at factor cost. Similarly, one can pick up any other two aggregates to find their relationship. Now let us see that GNP at factor cost is known to us and we need to find NDP at market price. So what will be the relationship then in this case? Once again, let's go step by step. Gross is given to you. You need to find net. So deduct depreciation. National is given to you. National product is given to you. You need to find domestic product. In this case, it will be national minus net factor income from abroad to get domestic. Then third is factor cost is known. You need to find market price. So you will be adding net indirect taxes to factor cost to find market price. So the equation then becomes GNP at factor cost minus depreciation minus net factor income earned from abroad plus net indirect taxes to get NDP at market price. In the similar manner, by applying these equations, one can have relationship between any of the aggregates. Now assess yourself and answer the simple question. What adjustments will be required to find NNP at factor cost when GDP at market price is known to you? You need to write an equation. Now please check your answer and go step by step. First, write it down. What is known to you? In this case, GDP at market price is known to you. So write it down first. Then write what are you supposed to find. After a gap, write down that particular aggregate. In this case, it is NNP at factor cost that you need to find. So write it down. Now see the first concept in this aggregate. First concept is gross in GDP, which is known to you, and you need to find net. So you have to move from gross to net. I hope you remember the equations, their relationship. So moving from gross to net means deducting depreciation. So write it down, minus depreciation. Next concept is to move from domestic, which is known to you, to find national. And the relationship between these two is explained by net factor income earned from abroad. So in this case, net factor income earned from abroad will be added. So write plus net factor income earned from abroad. Next is product, which is same in both the cases. Then it is market price for GDP, which you know. You need to find factor cost in NNP. And the relationship between these two is net indirect taxes. So from market price, net indirect taxes will be deducted to get factor cost. So you need to write minus net indirect taxes. So by writing this equation, you are able to find net national product at factor cost if GDP at market price is known to you. You can write any relationship provided you are clear with the three basic equations, that is the relation between domestic and national, relation between gross and net, relation between market price and factor cost. So it will either be added or deducted depending upon what you know and what you need to find. Now look at this question. Read these statements and identify the correct ones. I will read it for you. Statement 1. While calculating GDP, income generated by foreigners in a country is not taken into consideration. 2. While calculating GDP, income generated by nationals of a country outside the country is taken into consideration. 3. While calculating GNP, income generated by foreigners in a country is taken into consideration. 4. While calculating GNP, income generated by nationals of the country outside the country is taken into consideration. Options are A. Statement 1 only, B. Statement 2 only, C. Statement 2 and 3, and D. Statements 3 and 4. Please check your answer. Option B is correct. That is statement 2. The statement is that while calculating GDP, nationals of a country outside the country is taken into consideration. Why is it so? Or for that matter, how do you decide what is the correct answer in this case? You need to consider 2-3 aspects. 1. What comprises of a resident of a country? 2. What comprises of net factor income earned from abroad? That is, you must be clear with what is paid abroad and what is received from abroad. Out of the two, what gets included in GDP? What gets included in GNP? Or what is to be deducted in the case of GDP or in the case of GNP? Then whether it is this question or any other such question, you will have no problem in answering. So assess yourself. Keep reading and keep reassessing yourself. With this, the session comes to an end. In these previous 11 sessions, you have understood various basic concepts to estimate national income. These concepts include circular flow of income, what is domestic territory of a country, who is considered to be a normal resident of a country, how are intermediate goods different from final goods, how are consumer goods different from capital goods. Why should we do that? What is meant by investment? What is meant by consumption of fixed capital? How are factor payments different from transfer payments? What is meant by net factor income earned from abroad? What is meant by net indirect taxes? How are stocks different from flows? And finally, how are various concepts related to each other? That is, related aggregates of national income. All these concepts are very, very basic and foundational and help you to analyze the treatment of various items for their inclusion or exclusion from domestic income or national income, or estimation of domestic income and national income. So be very, very clear about these concepts and keep practicing. More you practice, better will it be. So the next session focuses on estimation of national income at current prices and at constant prices. Till then, practice, practice, and practice. See you in the next session.